Welcome to Money Making Sense, the show that talks about all things money. We are doing a tax tip series, and this is number 3. We're going to go into that new tax law that came out in December, which kind of frustrates me. I had to pour myself some more wine to get through this one. So we're going to find out all about this. So joining me on the show is Brandon Allfrey. You are a partner with Squire and Company. Welcome to the show.
Thank you. I'm grateful to be here.
So, okay, new tax law. What do I do? How does it affect me? How much money do I get back? That's the big thing. I want to know how much money I get back, because that's all I've heard is I'm going to get a lot of money back.
Absolutely, right? That's everyone's biggest concern, is how much money can I get back? The good news is that hopefully it simplifies taxes for a lot of people, and hopefully it brings some money back to some people with some reduced tax rates and potentially some credits that can help people with families.
Okay, so exactly how is that going to help? I mean, we say it supposedly. Is that going to help? If I file my taxes right now for April 15th, 2018, for the 2017 year, is it going to help me for 2017, or that's going forward?
So it'll be going forward. It won't touch anything for 2017. Everything there is still what we're used to, what we've been filing for years. But effective, everything happened January 1st, 2018 going forward. These new laws apply.
Okay. And I probably want to go to a certified public accountant to find out exactly what things I need to do, how many more kids I have to have in this year so I can take advantage of this tax cuts.
Absolutely. Because some of the big changes that have happened with the new tax law is that the dependency exemptions have now gone away for 2018 and beyond.
Oh.
So no longer are you going to get to claim kids or aunts and uncles, anybody might be living with you. You know,
so I have
parents.
to start shipping them off.
Yeah,
Is
right.
That
You don't
what
want
you're
them
saying?
anymore,
I don't want them anymore. No more kids. Go
yeah,
away.
So they've taken away that exemption amount. So a lot of people have been used to that. They've gotten a good reduction in their taxes because of that exemption.
Well, is there anything coming forward to make up for that?
So they've done a couple things to help, hopefully make up for it. That's the big panic button, right? So what they've done is they've increased the standard deduction for everyone across the board. So if you're filing married filing joint, the deduction's now $24,000, where before it was only $12,000 for 2017.
Okay, so this year I'm still going to have my standard deduction of $12,000 something, $700, and then I can deduct all these kids and uncles that I have that are just hanging out in the house, right? Okay, but when I file next year, I can't deduct the kids and the uncles and all these dependents that I have, but my standard deduction will go up to
$24,000.
$24,000. Okay. Yeah. What about, I've always itemized my deduction, so how does that change?
So now with that increase in the standard deduction, your itemized deductions have to go higher than that $24,000 for married filing joint in order to get any additional tax write-offs for your itemized deductions. Okay. So it may cause a lot of people not to itemize anymore just based on that alone, because that deduction amount, that standard deduction amount has been raised so high.
So that would simplify things.
Yes.
Okay. But what if I still have a really complex life?
Right.
What happens?
So there's some more things that have taken place in the law that will possibly change what you're used to filing your tax returns, right? So before, we've had things like miscellaneous itemized deductions, which the most common one has been unreimbursed employee expenses that people are claiming that they're not being reimbursed for from their jobs. Those deductions have completely been eliminated in this new tax law.
So my boss said, "Hey, Heather, we're going to do this podcast and you have to have a blue shirt."
Right.
So I bought this blue shirt, but I had to buy it on my own. I can write that off now. But going forward, the new tax law, I can't?
You won't be able to.
Oh, wow.
Right.
Okay.
So yeah, it's put a major limitation on some of the itemized deductions. A few of the other limitations that are important to people are the limitations for your state and property taxes that you've paid. Before, there's been no limit on how much that you could deduct with those, but they've placed a limit on here that now, going forward, you can only deduct up to $10,000 of state and property taxes combined as an itemized deduction.
Okay, so I own a home, and my property taxes every year are about $1,500, and then the state are you talking state taxes like out of my paycheck? What type of state taxes are we talking about?
Yeah, so the state taxes that are withheld out of your paycheck, and then what you would have to pay if you had to pay it at the end of the year to the state.
If I had if I was making a pretty big salary, and my state taxes were $9,000, but my property taxes are $1,500, that's $10,500.
Right.
I can only write off $10,000 of it.
That's correct.
So I take a hit on that $500.
You do.
Ooh. I'm not liking that. And then also, I know this will start to affect for next year when I file, but if I'm getting a lot more money out of my paycheck, that's one big thing they talk about. Oh, your paycheck, you'll see a bigger number in your paycheck. Won't I have to pay more taxes, state taxes on that?
Potentially. Right. So the IRS is actually working on withholding tables now to adjust for the new tax law changes. They're just barely coming out right now. The employers don't have to have them implemented until the end of February. And so right now you're going to see the same taxes withheld that are coming out.
Which is why I'm going to have a bigger paycheck.
Right.
But as soon as they get all those adjustments, I might see exactly where I was before or even less.
More than likely not, because the tax rates themselves have gone down.
Oh, okay.
Right. So because the tax rates have gone down, the amount of withholding is going to go down as well. Now, what we don't know is what the effect is on your state taxes being withheld out of your paycheck, and how that's going to be affected, because that's also based on what your W-4 says, that's how many exemptions you're claiming for federal tax purposes as well.
Okay, so it's sort of iffy as to whether overall, so this new tax law, what it sounds like to me is this new tax laws came out, sounds great sort of on the federal level, like my federal tax rate went down.
Right.
I'm going to get more money out of my paycheck that way. But the state is like, haha, we've got something up our sleeve. And so that may put us either exactly where we were before this tax law or even worse off.
Yeah. So I think worst case scenario from my perspective is that it might be the same just because of that state tax effect. If there's no change in what happens in the state tax laws, right? Best case scenario is that you're going to be a few dollars ahead actually because of reduced rates.
Okay.
But I don't see it having a negative impact on too many people that are working day to day and just living life as life goes by.
Okay, but I can, if for some reason it looks like I might be negatively affected or wind up almost the same place I already was, I can come to you and you can help me find other areas where I can save or get deductions or credits. Are they even going to are they going to have credits?
They are going to have credits, and that's one of the things that we didn't talk about with the dependency exemption going away, is that they've increased the child tax credit in addition to help make up for that, and they've made more of that money refundable. Even if you don't owe money, you can still get money back.
Okay, so I can't deduct the number of kids I have starting this year, but I can get more credits the more kids I got.
Yeah, they've doubled the credit amount, and then they've increased how much of that credit can actually be refundable, and increased the limit on the income that you make to receive that refundable credit.
And explain really quickly the difference between a credit and a deduction, and which one is preferable on our taxes.
Okay. So a deduction reduces your income, and then the taxes determine on what that income is after deductions. A credit comes in after the tax has been calculated to reduce the amount of tax that you pay.
Oh, okay.
So a credit is always better than a deduction, because it's dollar for dollar usually against the tax that you owe.
So if I've done my taxes, I've worked out all the deductions, and it says I owe $10,000 in taxes, but I have all these credits, I can now, instead of $10,000, I put these credits against it, and now I only owe $2,000.
Right.
Or maybe I get a refund.
Exactly. And some credits are refundable and some aren't.
Okay.
So this new child tax credit increase, they've made more of it so it is refundable, so that if it covers more than your tax, you can actually get that money back to help you out to take care of your family.
Awesome. Okay. Anything else that we need to know sort of in the immediacy of this new tax law that has come out that is causing me to drink?
Right. The first one is to watch your withholdings. as these new changes are implemented for what they're going to withhold because of your W-4 exemptions that you've claimed. We're all not quite sure how that's going to work out. So you'll want to take a look sooner rather than later, and definitely before the year end, to see, hey, am I on the right track for having enough money withheld? Because the last thing you want to do is get penalized because you thought, hey, this isn't going to affect me.
Oh,
right?
Okay. And so we need to come to you, make
right.
sure we don't run into
Yeah, we want to
that.
make sure at that point there. And then the other thing is just paying attention, because now the states, especially here in Utah, are looking at what does the impact of this federal law mean to the state law. So we're all looking forward to see if anything changes and what benefits it could bring on the state side as well as on the federal side.
Okay, awesome. Brandon Allfrey, you are a partner at Squire and Company PC. And if you need help with your taxes, please go to uacpa.org. You're going to find the CPA that's right for you. Thank you for joining Money Making Sense.
Thanks for being a Money Making Sense listener. Follow your common sense on the social media. Money Making Sense on Facebook, Twitter, and Instagram.